Ever feel like the world of finance is speaking a language you just don't understand?
Well, we're diving deep into one of the most fundamental documents in business, the balance sheet.
It's not just for accountants. We'll uncover how this snapshot of a company's financial health can empower you.
Whether you're looking at investing in a company or just want to understand how businesses really tick, this deep dive is for you.
We'll be using the example of BHP, a multinational mining giant.
Yeah, they're fascinating to look at because they have such a diverse portfolio.
And they're a great example of how even massive companies rely on these reports. So what exactly is a balance sheet?
Imagine it's a photograph capturing a company's assets,
The things they own.
liabilities,
The things they owe.
equity.
What's left for the owners, right?
Exactly.
Yeah.
All at a specific point in time.
Like frozen in time.
Exactly. It helps us assess a company's financial stability. Are they solvent?
Can they pay their bills?
Precisely.
So let's dive into these assets a bit more.
Sure.
We've got the obvious stuff, buildings, equipment, the tangible things you can see and touch.
Right.
But then things get really interesting with intangible assets.
Oh, absolutely.
What falls under that category?
Think about patents, brand value, things you can't physically hold, but contribute massively to a company's worth.
It's like trying to put a price tag on the Coca-Cola logo.
Yeah, exactly. Or the secret formula for a popular drink. It's not just about physical factories.
So how do you even begin to put a value on those things?
Well, there are a lot of complex methods,
I bet.
but they try to measure things like brand recognition and customer loyalty.
Wow.
And of course, we can't forget financial assets, things like stocks and bonds held by the company.
So it's all about understanding what a company has in its arsenal, right?
Exactly. What they can use to generate future profits.
And on the other side, we have those scary liabilities, the debts that every business has to manage.
Yeah.
Is all debt created equal, though?
That's a great question. Actually, no. We differentiate between short-term and long-term liabilities.
Makes sense.
Short-term liabilities are things like money owed to suppliers.
Got to keep those supplies coming.
Exactly. And those are expected to be paid off relatively quickly. Then you have your long-term liabilities.
Like mortgages or big loans, right?
Exactly. Those loans that stretch over years. And understanding that breakdown is crucial. It tells you if a company has a lot of immediate financial pressure.
So the balance sheet helps us see if a company is living within its means. Sort of like a personal budget, but on a massive scale.
That's a great analogy.
But I've heard some experts say debt isn't always a bad thing. Could you explain that?
Absolutely. Sometimes strategic debt can be a powerful tool. Look at companies like Amazon.
They've certainly grown quickly.
They've used debt to finance expansion. The key is to look at how that debt is being managed. Is it actually generating a return that justifies the risk?
So it's all about responsible borrowing and using those funds wisely.
Right. And that's where understanding equity comes in.
The owner's stake. That's what's left after you subtract the liabilities from the assets. So that's a simple calculation, right?
Well, it's the core concept.
Yeah.
But equity has its own nuances. There's retained earnings, the profit a company keeps over time to reinvest or maybe pay dividends.
Oh, I see.
Then you have share capital, which is the money raised from issuing shares. Both contribute to the big picture of equity.
It's like a company's financial fingerprint.
You could say that. It tells a story about their past decisions and how they manage their money.
This is really making the balance sheet come to life.
I'm glad to hear that.
It shows us a company's assets, how they're financed through debt, and what's left for the owners. But how do we use this to actually understand a company's solvency?
Solvency is all about a company's ability to pay its long-term debts. A balance sheet gives us that raw data.
Okay.
Analysts use ratios like the debt-to-equity ratio. That compares a company's total debt to its shareholder equity. A high ratio can indicate a higher risk of not being able to pay those debts.
Makes sense. Just like we don't want our personal bank account to be constantly overdrawn, companies need to demonstrate financial stability, right?
Exactly. That's where transparency comes in. Publicly traded companies,
Like our friend BHP.
yes, they have to publish their balance sheets regularly. That gives investors a clear view of the company's financial health.
So we're not just blindly throwing money at a company. We can actually see the numbers.
That's the power of transparency. Imagine trying to invest without that information. It would be like navigating in the dark.
So we've got this snapshot of a company's financial health from the balance sheet. But what are some things we should be looking for?
Well, one of the most important things is to look at those balance sheets over time, not just a single snapshot. Look for trends, red flags, anything that makes you pause.
So we're looking for patterns. Like if a company's debt is constantly rising, but their assets are shrinking, that's not a good sign. Right?
That's a huge red flag. You want to see a company strategically managing that debt. Conversely, if a company is increasing its assets
And paying down its debt.
that's a sign of potential growth, a healthy business that's making smart financial decisions. It's all about understanding the story those numbers are telling.
The balance sheet is a narrative. It's not just a bunch of numbers. It's a story about a company's financial journey. So if you were an investor, what would you be looking for? What would be the things that would catch your eye on a balance sheet?
For me, it's all about looking at the debt to equity ratio and the trend of that over time. Is the company taking on more debt than they can handle? Or are they using debt strategically to fuel growth? It's about finding that balance.
So much to think about.
Yeah, but hopefully you can see how powerful this document is, a tool that can empower investors and anyone who wants to understand the financial health of a business.
Thanks for joining us for this deep dive. Remember, the balance sheet is just one piece of the puzzle when it comes to evaluating a company.
Definitely do your research.
But it's a crucial piece that can give you valuable insights into a company's financial health. So the next time you see a balance sheet, don't be intimidated. Take the time to understand what it's telling you, and who knows, you might just uncover some hidden treasures. Thanks for listening.
Thanks.